Good morning. Welcome to Stock Market Today. It's Tuesday, January 26th, 2021, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. And we also give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. U.S. equities mixed in choppy Monday trading. Energy, financials, industrials, and materials lagged the broader tape. Tech and defensives led the market. Treasuries were mostly stronger with the curve flattening. Dollar was stronger against the euro, but flat against the yen. Gold was down 10 basis points. WTI crude finished up 1% on the day. As we get to the desk this morning, futures are flat. It's been a mixed, choppy early morning session from what I've been looking at. After Asian equities came under pressure overnight, Hong Kong down 2.5%, China down 1.5% after the PBOC withdrew liquidity and a central bank advisor warned about asset bubbles. Add the Chinese central bank to the list of institutions and investors who see bubbles everywhere. European markets are seeing good gains. Treasuries are mostly weaker with the curve steepening. The dollar is flat on the major crosses. Gold is down 10 basis points. WTI crude is up 60 basis points. Let's get back to those daily charts after the weekly reprieve yesterday. What I think is we're overbought in an uptrend. That's been my view actually for the past couple of weeks, and it's not really a matter of my view. It's what it is based on the indicators that we use at Chaikin Analytics. If you read my notes, whether we're looking at SPY or IWM, they've been overbought. Now Qs have entered overbought condition as well. So what does that mean? I talk about it a lot here. I talk a lot in our notes and on calls with clients. It's a calibration method for me, really. What's the trend? Up. Where are we within the trend? Overbought. Okay. Do I want to be aggressive when we're overbought? Probably not. Do I want to be mindful of what's going on under the surface? Of course. Do I want to be looking for the pockets of leadership? Yes. Are any of those oversold? If they are, those are your opportunities. Last week in my note, my market survival guide, which comes out every Tuesday, we highlighted opportunities in the commodity landscape, things like copper, COPX, the copper miners, as well as the rare earth miners, right? And those have panned out nicely over the past week. So the trend is up and still proven otherwise. I think we're just overbought. You have to be a little bit more selective with your ideas and how aggressive you want to be. Support 360 to 370, then 340 for the SPY. You know the levels. We've been talking about them for weeks. The path of least resistance is up. The trend is up until proven otherwise. The trend is your friend. However you want to spin it, the trend is up. What I think you do here is you enjoy the ride. If you have stocks that are moving higher, if you have ETFs, thematics that are moving higher, why tweak them? Right? Go back to the Jesse Livermore. Reminiscence of a stock operator. It was never my doing. It was my sitting. Ride the wave. Ride the trend. Make sure your risk management process is in place. Read up on some new ideas. It's a great opportunity to do that. There'll be plenty of time to trade. Let's hit our market in a minute now. What are we writing about? Rotation remains the theme and supports our balanced bullish view. We've had a bullish view on the market, as you know, and I've been saying you have to come at it from a balanced approach. It's no longer just large cap growth or value or, pick it. It's a balance. We've been talking for a long time about how participation is broadened out and taking a balanced bullish view works. Look at what's been working over the past 5 days of trading. We'll get to that in a little while, but it's the groups that were under pressure. Meanwhile, the cyclical commodity rotation, reflation type groups have come under pressure here in the near term as that trade has become crowded. People are finally waking up to what we saw months ago. Right? Comm services, again, sees a sharp snapback. Most sectors have actually seen their rating turn neutral here in Chaikin Analytics, right? So if I look at the sector ETFs, financials are the only one that's bullish. So everything else is kind of neutral, and staples is bearish. So that kind of, again, if I combine that with the overbought nature of our indicators, it promotes a less aggressive stance on the long side. All right, makes a ton of sense. Futures point to a mixed open today. It makes a ton of sense to me. If it doesn't make sense to you, spend some time thinking about it. Feel free to reach out to me. I'm happy to think about ideas. Let's look at the major indices now from a power bar perspective. Dow down 6 basis points yesterday, 9.3 bulls to bears. S&P up 43 bips. 140 to 56, bulls to bears there. The NASDAQ was your outperformer. See, again, what I was talking about. NASDAQ picking up what the small caps are dropping in the near term, right? NASDAQ up 83 bips, 27 to 16, bulls to bears. 837 and 91 bulls to bears for small caps, which were flat yesterday. Bonds uptick. Utilities, your best group. It was defensives leading the charge yesterday. Not the best look on earth, but okay. Utilities, staples, REITs, they've been a disaster. Anybody who's been reading my Tuesday notes on relative strength at the sector level knows that these groups have been a disaster. And they've largely, the fact that they've been a disaster has helped kind of push our bullish view on markets. So maybe a little bit of snapback here could happen. Let's take a look. Utilities up 2% yesterday, 7.7 bulls to bears there. Major indexes across the board are mostly bullish. Let's hit our bullish screen. It's Tuesday, sticking with that theme. So this is an interesting one, I think. Given the fact that the markets are overbought, one way to think about potentially adding ideas, if you wanted to, was to kind of go with the momentum. A lot of people know that I'm a momentum trend following analyst / investor. So what I did here was I took the S&P 500 as a starting universe. You could use any starting universe you'd like. I used the S&P 500 just to kind of keep it manageable. I wanted names that are bullish or very bullish within our 20-factor model at Chaikin Analytics. And then I wanted two pricing parameters. One, 1 month returns were at or near an all-time high. So at or near a 1 month high is kind of near-term momentum. And then 6 months at or near a high is the intermediate term momentum. So what I'm looking for here is something that's been in an uptrend and remains in an uptrend, right? I don't want stale momentum. And what you get are 16 names. Obviously, if you used a broader universe, you would. And you get those 16 names by then filtering for strong money flow and strong relative strength. And you'll see some, it's interesting here, right? Software, right? Home building, supply chain, banks. For those of you who read my market survival guide, you know we loved Silicon Valley Bank about 50% ago. Activision is a name we've been highlighting lately. Mosaic is part of our ag theme. Martin Marietta, if you believe in President Biden's infrastructure plans, you want to take a look at that. How often have you heard me sit here and pound the table on semiconductors? Well, here's Avago. Look at how diverse this group is. GM and Ford, right? I mean, industrials on the auto side. We have software. We have healthcare. We have builders. We have banks. We have other financials. This is what I'm talking about, the diversity, the broadness, the breadth of the rally. You can't get yourself pigeonholed into one spot. Keep an open mind. There's plenty of opportunity. Here's 16 names just in the S&P. Let's look at the sector tracker now, moving to the last 5 days. Comms and tech, discretionary, your alpha opportunities at the top of the list. We like to see that. REITs, healthcare, Utes, and staples are your defensive. So it's kind of a weird board, I guess. I think what it is the recognition that the cyclical rotation reflation ideas that we've been talking about since the summer are now crowded. They're crowded. So they need some time to rest. If you look at my note today, you'll see those relative trends weakening here in the near term, and it's fine. It makes sense. Nothing goes up in a straight line. Rotation is the lifeblood of bull markets. And as you know, I believe we're a start of a cyclical bull. And this is what we're seeing. Let's continue to watch it play out. Our industry and focus, telecom services, past 6 months, it's outperformed by nearly 10%. Power bar ratio, which again looks at future potential, is very strong. 15-3 bulls to bears there. Number 12 of 21 subsectors, up one slot. Take a look at TDS, Sienna, and USM. Very bullish, and bullish respectively. Dig in on those stocks. I'm not a fan of Sienna. I think it's a terrible business, but okay. Bullish, XTL, bullish, 15-3, strong trend. Look at this. I mean, overbought and extended is what you'd call it here. But look, again, the power of that personality change. Look how we go from lagging. The crossover happens here. If you're technically minded, you get a breakout shortly thereafter. I mean, everything just kind of lines up. You didn't have to be guessing about it down here. You had a higher probability trades up here. It's just that personality change that we talk about and that we look for. in stocks. We can look for them in ETFs as well, and XTL was no exception. It's overbought now. Within the context of this trend, it's extended to the upside. Let's look at what it's trending now. Yesterday's movers and shakers, IRM 52-week high, nothing company specific there. Fox A and Viacom, numbers 2 and 4 on this list respectively, had their price targets increased at Guggenheim yesterday. Sent those stocks higher. Clorox, CLX, nothing company specific there, up 4.75%, and SJM up 4.11%. Neutral rated. Loser side of the board, FTI is an energy name under pressure. WRK, I think they had a ransomware attack, down 5.5%. Energy weighs on the next two names, National Oil, Varco, and Baker. We also had Schlumberger's earnings, so I didn't have a chance to run through those, but that could be weighing on those names. And FCX, though bullish, was under pressure yesterday, been under pressure in the near term. They do report today. So just be mindful of that. Let's dig into the charts now. It's Tuesday. It's relative strength day. Look at the snapback on comm services, right? They came under pressure, and then all of a sudden we heard from Netflix, and then we saw Google break out. The video game stocks are strong. I've highlighted Activision and Take-Two of late. So we get the snapback. It's a lot of volatility to essentially go nowhere, really. Still a lot of wood to chop. I just think it's kind of interesting. Snapback came from deeply oversold levels, but notice RSI still in bearish ranges. So we'll give this one some time to play out. I just thought it was interesting to show the volatility here. We highlighted it in the note last week by saying it had gotten down to a key support level and was oversold. And then we got the snapback on that Google, on the Netflix move. So that's kind of fascinating to me. Not really sure what to make of it here in the near term. Maybe we'll see if they can get some traction, right? Is money now going to start rotating out of those cyclical reflation, crowded ideas and back into that secular growth leadership? I have no idea, but these are the data points we'll be watching to determine if that is in fact what's playing out. I don't know if it's what's playing out, but we'll watch. Staples relative deeply oversold. This has been one of the, you've seen this. I've showed it with utilities and REITs as the defensive group's been massive underperformers, and that's been the case. Now, look, I mean, this ratio has now become massively undersold, extended to the downside below the 200-day moving average, which is declining. This is not an uptrend, right? Let's be clear. But I think we could be overdone here in the near term. So, again, marry the picture. Marry the picture. We've got some rotation going on. Major markets are overbought. Defensives are oversold on a relative basis. Do you want to be super aggressive? Adding new ideas? I know I don't. That's how I'm viewing it, right? What I want to do is I have my positions in place. Most of them are working. Stops are moving up. It's really just a matter of sitting here, watching, reading, learning, educating, looking for themes, looking to see if there's anything changing under the surface. That's how I've been spending my time. Don't have to be in there gunslinging every day. If that's what your style is, then great. My commentary and my thought process is probably not for you. If you're kind of thinking more intermediate term, trend, momentum, ideas, investing, well, then you probably have some good ideas that are working. No need to mess with them. Stops are moving up. You ride the wave. One of the themes that I do like is blockchain technology, not to be confused with Bitcoin, but blockchain technology. Take a look at BLOK, transformational data. Solid uptrend consolidating above the moving averages. It's oversold and an outperformer. I think that this is an opportunity throughout 2021 to look for ideas. Hopefully you will drill down on the ETF itself and look at the individual holdings as well. That'll wrap us up. Take us for a test drive. I'm back tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.